Hi there. This is the story of Opendoor, ticker symbol OPEN. Right now the market cap is about 4.3 billion and the stock price in recent days went up quite a lot. And it is expected to increase even more from $5 to over $7. And the most important question is whether Opendoor is a great buy at the current price and current market cap. And the answer, you'll find it in this box. During this video, I'll open the box and we'll find the answer here. Now, to understand my answer, you have to understand why the stock price has increased so much in recent days, especially in recent months. What's the main catalyst that pushes the stock price higher and higher? Well, it's about this: interest rate cuts. There is a high probability that interest rates will be reduced from 4% to a lower number. And because of this, every time you hear possible interest rate cuts, Opendoor will go up. Do you know why? Because when you have lower interest rates, this increases demand for housing. And if you have a high demand in housing, home sales, you know how Opendoor makes money. It makes money from home sales, the spread on transactions. They buy a house at a lower price and sell it at a higher price. And when you have an increase in that demand for housing, they'll make more money in revenue. Plus, they also offer some financial services. And when you have high demand for housing, the revenue goes up. And maybe they can become profitable. And that's why the market cap and price goes up. And on top of this, you have to understand how this company works. You have some short sellers that assume Opendoor is a bad company and the price will go down. Well, when you have good news like interest rates cuts, those short sellers are forced to buy back the stock. And guess what happens? When they buy back the stock to cover the losses, they push the stock price even higher. And that's called the short squeeze. So you have two main catalysts working in your favor. Declining interest rates. This is the main one. And from this, you can have a possible short squeeze and of course, increase in the demand for housing. And that's why you'll see this high valuation for Opendoor. Now, if you look at the revenue for 24 was about 5.1 billion. And look at the current market cap, 4.3 billion, it's about the same, right? But then, if you look at 2022, you see the revenue when housing demand was quite high. The revenue was about 15 billion. And now compare the past revenue, 15 billion, with the current market cap, 4.3 billion. And if you do the same valuation, you can see that you can have from the current market cap a 3x if you have another boom in housing. If people start buying more houses or they sell their house and buy a new one. So if Opendoor goes back to 15 billion revenue and on top of that they also report a profit, yes, you can have a 3x in the current market cap. That is possible. But only if, be aware of this, you have a demand for housing and Opendoor reports a profit. Because if they don't report a profit, if you look at the number of shares, you have the risk of dilution. The market cap will go up, but your price will go down. As you can see, the number of shares has increased from 600 million to 700 million and then 730. And you have to be aware of this. Because if they don't make a profit, guess who will cover their losses? You, common investors like us, because they issue more shares, raise money from investors, and cover their losses. So you have to be aware of this. Then if you look at their balance sheet, it looks quite strong. They have in cash 1.1 billion. Real estate, what they bought, the houses they bought, 1.5 billion. Now, if you look also at their debt, 2.1 billion. And when you subtract that from their cash plus their assets, they are left with 500 million. Still good. Still good. They have some money left to cover those losses. And the increase in the number of shares might not be that high, but you have to be aware. Another thing you have to understand is how much will interest rates decrease, go down from 4% to 2%. If that happens, then you have a double. From 2% to 1%, that's even better. But again, nobody can predict this. What will happen with interest rates? They might be 4%, 2%, 3%. Nobody can do that. Nobody can do that. It's quite hard to predict what will happen with interest rates. So you have to be quite careful here. Now, to answer the question whether Opendoor right now is a great investment, in my view, to show you the answer here. For me, Opendoor is not a great investment, even if they have the possibility to go up 3x in the next years, especially if interest rates go down. And let me explain why I don't see it as a great investment. They haven't proven yet their business model to at least make a profit on this revenue. If you look, revenue, yes, in 2022 was 15 billion, but they still reported a loss of 1.3 billion. So no profits. And if this company doesn't become profitable, yes, they can increase revenue as much as they want, but if they don't become profitable, it's worthless. Any company that reports a loss, you have the expectation to become profitable or unprofitable. And if they continue to report more losses, that will be bad for shareholders. Because why is that? They will continue to issue more shares to cover those losses. And that will be bad for shareholders, especially past shareholders. And then, yes, you have to understand why do they lower interest rates. Why they raise interest rates. They raise interest rates because of high inflation, right? And now they want to lower it because of weak labor market. And if you have a weak labor market, people no longer have jobs. Do you think the increase in demand for housing will happen overnight, right after they lower the interest rates? I don't think so. That will happen so fast. It will take some years, maybe. Especially, it also depends on the economy, how it behaves, how it continues further. So you have to be very, very careful with this company. And in my view, right now is not a great investment. Opendoor is not a great investment to be in. Now, if you want real investment ideas where you have a margin of safety, profitable companies, and also get some dividends, because from this company you get nothing, simply go to my profile, press join, and choose Titan Investor, and then you have access to my portfolio. There you can see my investments. All companies that I bought are up, and that's a great performance over the last 3 years. Plus, I also offer an investing course, other in-depth analysis, and I also get access to the previous levels, Spartan and Gladiator. So if you want to stop losing money, increase your returns, make real profits, real money, join my membership. Now, there are some people that believe in the future of Opendoor, and that's okay, no problem. And they want to invest in this company, only in this company. They don't want to take advantage of my portfolio, which is quite a bargain right now. So if you were to force me to invest $1 million in Opendoor, tell me, John, you're only allowed to invest in Opendoor and make a profit. What price would you pay? Well, the answer to that question will be available for members. And to be fair with you, for Spartan members, where the price is low. Of course, if you join Titan, you also get access to the Spartan members. The difference is not that high. So see you there.